The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 1st terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. Of course, the easiest way to do it is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, we're going to go look at the circumstance of the bulls and the bears, the buyers and the sellers. We'll go figure out what it is that they're communicating to both you and I. But first, I want you to know that I'm grateful for your presence here. I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648, internationally 727-445-1044. You can email me. You can ping me inside the den out there, however it is you want to get your message so that we can get together. We can go take a look at whatever it is that you are looking at. This is, of course, terrific Thursday. I hope you're having a terrific day. And it is the Hotel California, sponsored by none other than Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading down 177 points. She's trading at 16,108. S&P is off 16 points at 1903. NASDAQ Composite down 52 points at 4568. Russell's off 15 points, trading at 1085. Gold is flat. Silver's flat. Light sweet crude is flat. So in the commodity sector, a lot of flatness, not flat with regard to the U.S. dollar index out there. So we've got a little bit of movement inside currency pairs. Leading the charge to the downside, Tyler Technology up $10. That's up 7%. Sarepta Therapeutics up by about 21%. That's $6 and change. Sherwin-Williams painting the town green today. That's up $6.50. Madison Square Gardens up about 6. Insight Corp up 5. AutoZone up 4. To the downside, Illumina Inc. off about 10%, down $17. Tesla is off $10. Intuitive Surgical down about 9. Priceline off 7. Biogen down $6. The jazzy one, Jazz Pharmaceuticals, off $5 as well. But first, let's go try to figure out what these markets may or may not be doing in the short term. So let's go take a look at the NQ, because if we take a look at, well, just out of curiosity, percentage-wise, who's leading us down? Where are the indexes out here? You've got the NASDAQ's off 1%, S&P 0.8, Dow's off 1%, the Russell down 1 0.3% out there. Now let's still stick with the NQ and see what we've got going on. Now, if we take a look at the 30-minute chart out here, this is going to be good for both bulls and bears, at least to understand what's going on and where the next move will be. So coming off of this high out here at about 4 o'clock in the morning, had a nice little doji high followed by a little bearish engulfing candle out there. You can see it had made 6 out of 7 waves to the upside. Moves down, has motored down relatively quickly once the bell opened this morning. But we can see that what price has done as inside the NQ, as it was moving lower into the time period here of 12:30, it was moving lower with your favorite pattern, mine too. That's when price moves lower with less relative weakness. That's what the NQ was doing. Now, it's not just that it was doing that. At that candle session, that's at 12:30, actually formed a hammer candle. Now, that's really cool for both bulls and bears. What ought to happen is what the internals are communicating to you and I are really a couple of different things. One, that the move lower has run out of energy, and that the bulls are willing to defend this area. Now, we don't know how strong of a line that will be. You and I will know how strong that is if, in fact, the bottom of that hammer candle gets tested. Now, that hammer candle is priced out at 41.16 and a quarter. And what took place as we came into the 12:30 to 1 p.m. session is we had a little bit of a bullish engulfing candle as well. So we've got the bulls that are showing up, and we also have a TAS market profile, where the bottom of the box, that's your support level. That's that lime green line on my screen out here. And you can see the little cyan color, light blue line. You can see how that is closer to the bottom of the box. So you've really got three elements on a 30-minute chart here for the NQ that say this should be good support. Because when the point of control is closer to the bottom of the box, that just tells us that is more of a bullish setup. Now, if the bulls are able to defend this territory and move price higher, and I don't know whether they will or they won't, but if they do, they first have to clear about the 41.44 hurdle. And if they can do that, price could run all the way up to 41.86. Likewise, if in fact you see that this was just the junior bulls that were showing up here and they were trying to defend this level, and we see a close below the price point of 41.16, well, what's likely to happen is price will pull all the way back to where 2 days ago at about 3:30 in the afternoon, the bulls started to make, or the counter trend rally began. And that takes you back into about the 4,041 level. You're at 41.24. So you're dealing with a fairly wide range out here. But the good news is, for both bulls and bears out here, now, it could fall, price could fall back to another area if we just were to take a look at retracements. But that's the 30-minute chart. So now that we've got our head wrapped around the 30-minute chart, we've got another 17 minutes in this 30-minute session. We know what to look for and then what to anticipate after that. Now let's step our game up and let's go to a 300-minute chart out here. And as we take a look at the 300-minute time frame charts, let's switch over here to our eSignal platform. And here we have in the upper left-hand corner the S&P futures, the ES Mini. Upper right-hand corner, the NASDAQ futures. Lower left, Russell 2000. Lower right, we've got the Dow futures. Lots of great information on these charts. Now, we were looking at the NQ, so let's go ahead and blow that little puppy up on our screen out here. And we can see that during the last 5 hours, there is a new profile that has arrived. And that profile says also that a level of support is at 41.13.93. So we've got the bottom of the hammer candle. We've got the bottom of a TAS market profile on a 5-hour chart out there. And again, so now we've just added a fourth element, in my opinion, a fourth element of support, because as I take a look at the distribution here between buyers and sellers point of control, slightly favored to the bulls, just slightly favored to the bulls out here. So we've got a fourth element, though, that tells us that the price of the NQ ought to find support. And if that level gives way, really does suggest 100% move coming all the way back down to the bottom. Now, let's also take a look and see what retracement patterns here, what they look like. Now, hold on a second here. I had blown that up. Let me just do this to make sure I grab the right portion of the swing point. There's a fifth element. You're at the 0.618 retracement level. So 41.11 is also the 0.618 retracement. So we've got 5 levels of where the market could potentially turn when we take a look at the NQ. So if that fails, it says to me I was going to suggest that price would get down to 40.80, and I'm going to say that even though that's a possibility, I think that's like an unlikely possibility. Instead, I think you get all the way back to that 40 level, and the 2-day wasn't really a 2-day. Well, yeah, it wasn't 2 days. It was basically a day and a half, a little over a day and a half with regard to its counter trend rally, will cease to exist. Not just cease to exist. You can expect lower prices tomorrow and Monday and Tuesday and Wednesday. I've got to go look at my calendar just to make sure, but that's what you could anticipate inside of the market. Now, what we can also do, as long as we're in this 5-hour section of our futures contracts, the other element, which is also cool to be able to put this together for both bulls and bears, really, in my opinion, comes from the Dow futures. In the case of the Dow futures, price this morning during that early route, and it's not exactly like it's had much of a bounce back out here, but it got down to a price point of 15,968. 15,969 happens to be the weekly TAS bottom of its box. So you get below that, that's going to join the NQ. That's going to add pressure like there's no tomorrow. So you've got a couple of different price point areas to be looking for. And if in fact these levels give way, so if these things don't hold, the preponderance of evidence says, and even though people are talking about a test of August 24th, you know that I've shared with you Hassenpfeffer. It's all BS. It's all before Steve out there. The price is not going to just head to the August 24th levels. It'll blow out those August 24th levels and probably do it in a huge way out there. So this is absolutely the time to be careful. But we've got the price points to be looking for. Now, on the shorter term charts for the ES Mini, as an example, it does not have a price relative strength divergent pattern to the bottom. It just has a new TAS market profile. Looks like right now, it's trying to form a hammer candle, but we won't know for another 13 minutes whether it does or it doesn't. I have to apologize to subscribers of my newsletter service, because this morning when I was doing my summary, I said that there were no reversal signals that I could see, and that was incorrect. Apparently I had not refreshed my chart here for the ES Mini. You and I just took a look at the NQ 30-minute chart that showed a potential bottoming pattern. Well, the ES Mini at the time period of 4 o'clock and really by 4:30 in the morning, we had price moving higher with less relative weakness. Then you got that bearish reversal signal, that good old bearish engulfing candle. But with regard to what's going on right now at the bottom of the charts out here, inside the 30-minute charts here, I'll go ahead and put the Dow futures up here. Again, it's all about the NQ, in my opinion, when we take a look at what's going on. So those are the numbers to be focused on and paying attention to. I have a question that says, could I take a look at the QQQ? So I will be happy to do that. So we'll switch over. We'll go take a look at the Q Series ETF. Let's take a look at the volume patterns as well out here. Give me a moment. I did this probably about an hour ago or so, and it looked like the Qs were on tap to do somewhere around 53 million in volume today. So let's go. So that's what they're, and right now you're at 25 million. So I don't know if it's still on the same pace, but let's take a look at it. You're 25 million shares, and what price is doing inside of the Qs out here is it's come back and testing its swing point from September 29th. Now, that swing point had 49 million shares, and I'm saying you're going to do about 53. Not me, but if I just did straight line math, was saying, okay, you're going to do about 53 million shares. So you're pulling back into that swing point, not with light volume, but similar volume. The key level inside the Qs to be watching is going to be the high, 101.26. Now, the truth is, if you really are coming back with volume, just because maybe it closes above that price point out there, just that it says you would have a rejection of price, you wouldn't have a rejection of volume. Says, hey, I'm going to go ahead and be back down there. But as we go to break here, let me just punch in the new volume numbers and see if it changes much from 53 million. We'll finish up the Qs when we get back from this first commercial message. Steve Rhodes with TFNN. We'll be right back, folks. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The cues we were talking about before we went into a break, I revised the just simply use the numbers, volume numbers inside the cues for the first 4 hours of trading, but 6 minutes till we close that out. And volume actually has dropped off significantly during the last hour. It looks like now the estimated volume inside the queue is about 41 million shares, and that's backing down into this swing point here with 49 million shares. Of course, anything can unfold over the course of the next several hours, but at this stage of the game, you do have a move lower inside the queues with light volume. In fact, you've got it with regard to the ETF structures across the board. So as long as we're here. Now, what I will tell you is that the ETF structures, in my opinion, with the exception of the IWM a couple of days ago, are not providing us with any type of consistent signals. We get much better signals with regard to what the market is doing by taking a look at the futures contracts. In the case of the IWM, what it did, let me go ahead and get rid of a couple lines out here. Just in case you missed yesterday's show, of course, we talked about this on Monday or Tuesday before it actually occurred, that the likely target for the IWM was going to be the top of the October 15th swing point, which is 107, because of the volume that was down there, 117 million shares. Now, price had pulled back with light volume, tested that area on 49 million shares, rejected it, and then you had a nice little bullish reversal signal yesterday. Of course, that bullish reversal signals had no follow-through out there. The pullback today, so far you've done 24.9 million shares. This suggests to you and I that we'll see about 40 million shares. Now, that's certainly going to be much lighter than that October 2014 low. It also happens to be lighter in volume than the 49 million shares that the IWM did on September the 29th out there. So if for some, if it's, these markets have been going in both directions here. So, truly a trader's market. There's certainly more than leaning to the downside, but nonetheless, we've seen things move in both directions out here. If in fact the IWM is able to close above 109.11, you'll have a rejection of that swing point on light volume. And where could price move up to? Could even get all the way back to that trend line as well. If you get it close below 107 even, Steven, you're going to have light volume compared to that swing point from October 15th. But that says, of 2014, that says you're going to go down to the bottom, at least the bottom, which would be 103.54. So that's what to be looking out for inside of the small caps. If we take a look at the SPYs, but as I say, the ETF structures, if you were to take a look at all four ETF structures, and it's been like this for a while now, for several weeks, there's no synergy. They're not lining up with each other where all four are saying, this is what I'm doing. We've got some that are testing swing points on light volume, rejecting it. We've got others that are not doing that. In the case of the SPYs, today you've done 75 million shares. That 75 million shares equates to about 122 million shares. Now, what the SPYs have done thus far is they've tested the swing point from September 29. Just 2 days ago. The top of that is what they've tested, 189.74. The volume there is 159 million shares. 159 versus 122, you're short by about 23% on the order of volume out there. So if in fact that's what happens and you close above that swing point high of 189.74, its message will be you can't bust them down. You tested a swing point, time to go bust them up. Bust them up inside of the SPYs, to me, says 195.84, if it can, in fact, get up to that level out there. So that's what's going on inside of the SPY. Let's go ahead and finish this up and take a look at the Dow Diamonds out here, DIA. As we take a look at it volume-wise, it's done 4.1 million shares. That equates out to a little over 6.5 million, between 6.5 to 7 million shares. It's trading currently inside its September 29 swing point, which had 9 million shares. So really, you're pulling back into that with light volume. It would need to reject the high of 160.96. Doesn't have to. It can come back and test the low of September 1st, which is 159.74. That's got 14 million shares. It just doesn't have enough volume to push through this area. It doesn't have enough volume as of 1:28 in the afternoon on October the 1st. Anything can happen in the next moment. But, we're just giving you what's going on as we speak. Now, Apple, if I were to take a look at the ETF structures, the only ETF structure that's got volume in it to the downside is the technology sector. So let's go take a look at it. It's done 8.5 million shares right now. That equates to about, no, my math is wrong here. How could that possibly be? Good thing we're going to break here. Stevie gets to check the formula. Yeah, something's not right in the Motor City. Dow's off 177. S&P is down 17. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pezzavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Dow's off 163. S&P is down 15. So I was mentioning the XLK. My formula, I did correct it. So the XLK has the leading sector within inside the S&P 500. It's done 8.6 million shares as of 1:30, and it says that it ought to do about 13.8 million shares. Now, it's trading into a that's the XLV. It'd be good if I actually get the right chart out here. Good Lord. So if we take a look at it, the swing point that it's trading back into, really a couple of them, but if we just take a look at the most recent one, just 2 days ago, September 29th, that has volume of 13 million shares. So you got 13 million shares going against about 13 million shares. So it's about even Steven. All really depends on what happens here with Apple. Apple's got 46 million shares to the downside, and that says you should do about 75 million shares. That says it's taking out this swing point from September 29th there, as long as it can close below that level of 107.86. But Apple really is just moving, sideways, so to speak, out here. And that sideways box looks a lot like, pretty much, I'd have to say, that. So Apple says, hey, it can simply just move lower, get down to about the August 26th level, around 105.05. And so there's now obviously it puts a lot of pressure on the markets, specifically the NDX, the Dow. And the volume is it's fairly decent volume inside of Apple. The XLV That's trading out at 65.96. It's done about 11 million shares today, and the XLV should do about 18, 19 million. That 18 or 19 million, the swing point that it's trying to bust through, and it doesn't have the energy, is the September 28 swing point that's got 66 million shares. So that's going to be light by some 70% out here. That's what's going on inside of the XLV. So what should we take a look at next? Let's go take a look at gold, see what gold is doing. So gold's been struggling here lately. 1113 is what it's trading at. And if we take a look at gold, gold, what it has done from the low of September 11th to the high out here on September 24th, it's backed off by its 0.786 retracement out here. It's we talked about this yesterday. It hit that number 1110 and just a bit of change out here. It is still holding. You've got a little doji style candle out here. We can see that price has, even though it broke above that trend line, that yellow line. By the way, you're looking at the top panel of my screen out here. The bottom panel, and I'm glad you asked me, what was that? What is that? That happens to be gold priced in euros, which is still traveling above its descending trend line out here. However, we did have a full moon, a super full moon on Sunday, and gold tends to respond, or tends to be an initiation wave off of that full moon, and clearly it's been to the downside. It is really important for gold to hold this 1110 area out here, and there's no real signal whether or not it's going to do that or not at this stage of the game. Let's go check in on some of the mine. Now, you've got, yesterday you had the dollar up. You had gold down. You had the mining stocks that were up. Today you got exactly the opposite. You've got the U.S. dollar index pulling back. You've got the gold mining stocks pulling back. Let's take a look at Rand Gold. GOLD is the ticker symbol. Rand Gold yesterday moved slightly higher. It actually made a higher high today, by the way. You've got some good volume. 728,000 shares is pushing into 1.3 million. So actually, that's not too bad. What does that say? Volume-wise, you've done 728. And you're going to do a little over 1 million shares, 1.1. Still not enough to take out the resistance. So inside of Rand Gold, here's really the level to be watching that it needs to take out. And that's going to be 61.61. We had a little gap down on August 26th with 1.1 million shares. That's really your line of demarcation, line of resistance inside of Rand Gold. Doesn't look too bad, though. Agnico Eagle. Now, that's pulling back a little bit stronger. Looks like 79 cents to the downside. And it was not pushing to higher highs out here. Really been consolidating sideways ever since the trading session of September 24th that had 6.5 million shares out there. So far today, pulling back with 1.8. Still not too bad considering it's going into where it broke out with 6.5. So just some sideways action going on inside of Agnico Eagle. Let's take a look at Gold Corp. GG is the ticker symbol out here. Basically, the stock looks just horrible. What I mean by horrible, she's trading down below its July 24th swing point. That price level is 1235. Volume there was 21 million shares. I mean, you've been trading down below with light volume 9, 11, and now today you've done 5. So, 5 million is the equivalent of doing about 8 million today. But it's just a stock that certainly has not taken off to the upside, which is one of the reasons why you see the GDX struggling out here. So there are certain gold stocks that are doing well and others that basically are sucking. I won't even go any further than that. They're just sucking wind is what we'll call it. If we take a look at light sweet crude, we haven't looked at this for a couple of days. Let's go take a look at it. Light sweet crude today trying to break through a trend line out here. So you've got a nice little trend line. You can see the little wedgie pattern that it is formed out here. So price is traveling right with inside that wedge, that little flag out there. Looks to me like it wants to break out to the upside, but it needs to get above that trend line. If we do, then you'll have an initiation move at least equal to the base of this this little wedge out here, which is in essence is about that price point. If we go ahead and we move that, if it breaks the upside, says that, oh, that's interesting, says that price ought to make its way really back to about 56.44. But at this stage, it has not been able to break out to the upside. If we take a look at, what do we want to look at next? Hey, let's look at some of these stocks that are moving. Oh, somebody asked, oh, maybe they just said that maybe that wasn't even intended for me, but the question says something is up with Verizon, BZ. So let's go see what is up with Verizon. Let's not keep that to ourselves out here. Let's go take a look and see what, something is going on in Verizon. That's something that's going on. I don't know if it really did trade down to the bottom of that August 24th level, which is 38.06. You're at 42.73, but you're below the, we do know that it traded down to a level of 43.50 back on August 25th, and you're below that. So, and the volume on that bar was 27 million, done 13 million shares. So you got light volume-ish, but nonetheless, Verizon, where would it be pulling back to if we didn't have August the 24th out here? Let's put this on a weekly time frame. Give me a moment to do that. There we go. So let's take a look at a weekly time frame, get a feel for where Verizon would be pulling back to. And at this stage of the game, you've got to say that the target inside of Verizon is going to be at least the bottom of the November 12th 2012 swing point. That's at $40.51. You're at 42.73 right now. Let's take a look at what do we want to take a look at? What do we want? Let's look at some stocks here that are moving to the upside. Let's take a look at, well, what is Tyler Technologies? Is that a buyout? Yeah, they're going to acquire New World Systems. So let's take a look at Madison Square Gardens. No buyout there, is there? No. So let's take a look at Madison Square Gardens. Let's not look at the weekly chart. What the heck? Let me see here. Madison Square Gardens. MSG. That's a public company. What's the deal here? They're spinning off something. Okay, so let's skip Madison Square Gardens. Sorry about that, folks. Let's go take a look at AutoZone. AZO is the ticker symbol. Now, AutoZone had a heck of a trading session back on September 25th out here. Was pushing higher, 500,000 shares, was not able to overtake the August 19th high. Pretty interesting because that only had 190,000 shares out there. Since then, this thing has pulled back volume-wise. Nothing really big in store. You've done 202,000 shares today. Almost looks a lot like the market, right? With the but now this is consolidating up towards the highs, not the bottoms out here. So AutoZone doesn't look too bad. It pulled back with 413,000 shares, so that wasn't so good on September 28th. Yesterday, or a couple days ago, 276. Yesterday, 400,000. Today, it's doing 200,000. So certainly consolidating up here at these highs at the moment. AZO being the ticker symbol. Yeah, but let's go take a look at Sarepta Therapeutics, a one-time at least Bud Rolf's stock out here, but that one is when I believe it was trading around $4 or $5. If we pull this thing back, it ought to populate. And where's the $4? Yeah, right back here, back in July of 2012. This stock went from $3 or so and ended up actually making a high in October of 2013, up at about the 55 area. But you know, this is not for the faint of heart because it was up at $55 and then in January 2015 down around $11. So what is Sarepta Therapeutics doing? I know they're trying to cure something. And today, though, it is trading inside the swing point from September 21st. It's got 2.1 million shares. You're into it with 6.8 million shares. So it's certainly moving higher with volume. If it can take out the high of 41.47, Sarepta Therapeutics, SRPT, is the ticker symbol. If it can take that out, it says it gets all the way back into that 55 level, 54.42 to 50.71. Also moving to the upside, painting the town to the green is Sherwin-Williams, up 3%, $6 and change, but it's really just off the bottom. So if we take a look at Sherwin-Williams out here, this thing has pulled back to what? What did this? Let's put this on a weekly time frame out here on Sherwin-Williams, try to get a feel for what it's doing after it completed its larger A to B equals CD. Let's take a look at Sherwin-Williams. And it's pulling all the way back into October of 2014. On a weekly basis, you've got 4.4 million shares. It's tested the top of that level, and you're pushing into it with volume. Already done 7 million shares for the week. So even if it rejects that area, chances are that Sherwin-Williams is going to go try to tag the bottom. 202.01. You're at 229 as we speak right now. What else do we have that's moving? Let's take a look at what's moving to the downside. Illumina, one of the biotech stocks, off $18, down 10% out here. Here's our weekly chart. See if there's anything here that looks good. It looks more likely than not that what Illumina is eventually going to do is pull back into the area where it broke out around the 107 range, and that takes you all the way back into January of 2014. This week you've done 12 million shares. That's below the swing point in August, which had 9 million shares out here. So, blowing that apart, I'd say this thing comes all the way back into that breakout. At least that's a target that I would be looking for. Ticker symbol there is ILMN. Also moving to the downside, we've got Tesla off about $10. What is Tesla doing again? I still have the weekly chart up on our screen out here. We don't take a look at the weeklies often enough. If we take a look at Tesla, it's a week of August 24th, 32 million shares. You're doing light volume on the pullback, 16 million shares thus far. That says let's go see what it's doing on a daily chart, see if it's testing anything. And the answer is no. Not really. You'd wanted to see it test August 24th high at 231.40, even the next day at 230.90, and it's not down there. Chances are that's where Tesla is going to run to, at least those levels, perhaps lower. If we take a look at Lending Tree, TREE is the ticker symbol. That's off 7%, down $6.80 out here. Lending Tree has pulled back into its breakout area, wide-ranging bar, wide price spread, had 1.2 million shares, and you're doing 164,000 shares. Now, it has not tested the actual open window, which is 83.86, where gaps are your friends. So, I wish I could give you the conviction that the market is going to move higher here between now and February, March, April of next year, but I really can't do that. I would be disingenuous to suggest that that was the case. If it were the case, this would be the kind of stock that you'd want to be taking a look at putting into your portfolio, at least building something. If it really comes back and it tests this area, rejects on light volume, because it's also got some problems out here. That problem is volume off of the highs from August 21st. So probably this is more likely a consolidation between $83 and 120, maybe 133 out here. But let's face it, pretty much everything is going to get tarnished, shucked, tarred, and feathered between now and February, March, April of next year out there. Wish I could give you better news, but it is not in the it's just not in the cards as we speak right now on October the 1st. What else do we have moving here that we haven't really looked at? Oh, Dunkin'. Everything's running on Dunkin', but it's running out the door, so there must be a problem with their coffee mix out here today. I don't know why it is trading lower. I don't know what the news is. Let's see. No tricks, just treats. Baskin-Robbins is celebrating something. Oh, another flavor out there. Well, apparently that flavor isn't doing a whole lot for the stocks. Maybe they ought to get rid of it. But if we take a look at what Dunkin' Donuts is doing, gap down today. It's done 8.4 million shares out here. It's a nasty-looking stock chart. It's going to get all the way back to the 2013 area. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's off about 126 right now. What a day we've had inside the market, right? From top to bottom in the Dow futures. You've had a 377-point swing out there. So you talk about a market that's got a little something for both bulls and bears out there. All that you really want to be able to do is read the signals. Don't get too caught up and married to any one side of the trade, or at least be able to anticipate. That's really what I want you to be able to do, is anticipate what the market's next moves are. You know, we use different tools to help us project where price is headed to, retracement, swing points, things of that sort out there. But you and I also use tools to help us identify on different time frames what the message is. You know, when a market moves higher, as it was doing earlier this morning, doing on less relative strength out there, it's time to start, you know, looking at the charts to see if you can identify those patterns. Because when they do, and then the bears show up, remember, there's only one real responsibility of the market participants. And that's the paint day signal for you and I. That's all that they are there to do. And then it's up to you and I to just read those signals, just like in the ES Mini as it was cruising higher earlier this morning, 4 o'clock, doing less relative strength out there. And then you had the bulls, the bears show up, nice big old bearish engulfing candle. That was sending you a very instructive message. Just as we began the show at 1 o'clock, we took a look at the NQ. We took a look at the NQ. It was pushing lower with less relative weakness out here. Now, I don't know how the market is going to end up at the end of the day here. I know what it's telling you at 155. It's telling us that the bulls are back from lunch. They're going to try to defend the heck out of this territory, which inside the NQ is 41.16. You've got to watch the price point of about 41.43. If price is able to close above that level, you could anticipate that price is going to get up to 41.86. Likewise, if price blows out the low of that hammer candle, 41.16, you can, get under, just like when we were kids and we had to, hibernate under tables to stop us from all of the blast of a atomic bomb, as if that was really going to work out there. Well, you could do the same kind of thing. You could kiss your behind goodbye if you see a close below that hammer candle out here. Now, I'll give it to you straight. I think I've been giving it to you straight out here. If we take a look at the summation index, as I take a look at New York Stock Exchange, that's on the left-hand panel. NASDAQ Composite, just next to it. To the right of that, third in, is going to be the Dow. All three of them right now, price oscillators below zero. So if the day finishes out the day like this, and the S&P closes below 1910.86. Now, I'm not going to be exact here, but 1910.86, again, I'm not being exact, but if you wanted to write that number down on a pad of paper, and you can call in 1910.86, if those four conditions occur, 1910.86, the Dow about where it's at right now, the oscillators inside the NASDAQ Composite and the New York Stock Exchange don't get above zero. You'll have, remember, the ETF structures aren't providing us with that uniformity across the board with regard to its messages. Well, here they would be. 1910.86. That's the number, to the tick, to the penny. You're trading 1910.91 as we speak right now. You get 1910.91 at the end of the day, you don't have a signal across the board, but you get below that, and you would. So, folks, thanks so much for joining us. Stay tuned, because our man David White is up next. That's Squeezably, Huggably Soft, or so he says he is. He'll be up next. Let's see, it is Terrific Thursday. Oh, that's right, Andy Heck. He's on vacation. So you'll just have to stay tuned for the Tom O'Brien Show from 3 to 5. Folks, have a great afternoon, great morning, wherever it is that you are. And I'll look forward to seeing you on Fun Day Friday for a fantastic show. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.